Japan, the world's third biggest economy, is in serious trouble. And if things go wrong there, it could shake the entire global economy. What happened to the world's piggy bank? And why should you care? Let's break it down. For almost 50 years, Japan was like the world's savings account. They invested trillions of dollars all over the globe, US bonds, tech stocks, even airports in other countries. At one point, Japan had over $3 trillion in foreign assets, more than any country ever. Whenever big markets needed money, like Wall Street or Europe, Japan was there to help. But now that money is drying up. Why? Because Japan owes a lot. Its debt is 260% of its economy. That's more than twice what the US owes by comparison. Even Japan's own leaders admit their finances are worse than Greece during its financial meltdown. But the biggest problem? Japan is running out of people. In 2024, more than twice as many people died in Japan as were born. The population peaked in 2010 and has been shrinking ever since. Fewer young people means fewer workers. That leads to lower tax money and higher costs to care for older people. Right now, only 1.8 workers support every one retiree. In the 1990s, it was 5 workers per retiree. That's a huge difference, and it's putting a big strain on the economy. Japan tried solutions like paying families to have kids or relaxing immigration rules, but so far, birth rates are still super low. So how did Japan fall into this mess? It started in the 1990s when their economy crashed after a giant real estate bubble burst. To fix it, the government spent money, a lot of money, on roads, bridges, and more. They kept spending for decades, even during disasters and recessions. To keep things going, Japan borrowed more and more, but interest rates stayed near zero for years, and people in Japan didn't mind because prices weren't rising. That made it easy to borrow money, so people did, big time. Japan's central bank even printed money to buy its own government's debt, helping keep interest rates low. So why should you care? Because Japan helped supply cheap money to the entire world. Investors would borrow Japanese yen at low rates and invest it elsewhere, like the US or Europe, for profit. This quote-unquote carry trade worked as long as Japan's rates stayed low. But in 2024, that changed. Inflation finally hit Japan. Wages rose, prices rose, and for the first time in years, Japan raised its interest rates. Investors panicked. They rushed to pay back their yen loans, which caused global markets to shake. Japan owns trillions in US bonds. If they sell even a small part, interest rates in America could rise. That could hurt everything from stock markets to home loans. Japan may not collapse tomorrow, but it's a slow motion crisis that could impact everyone if it continues. It's the kind of thing that makes the entire world hold its breath. Japan may be far away, but its money is everywhere. If the world's piggy bank breaks, everyone could feel it. Hit that subscribe button for more breakdowns like this, and we'll see you in the next video. And also, let me know what you think in the comment section. Do you think that what happens with Japan is going to affect us in the US? Or do you think we shouldn't worry about it? I want to hear from you. See you in the next video.